Very good morning. Super Thursday to you. Stocks greet Biden with record highs. Morgan Stanley beats across the board. Jack Ma is back. These are the three things that we will talk about. Welcome to today's episode of Morning Wealth. Investors greeted the Biden administration with enthusiasm, sending US stocks to new highs. The S&P 500 rose 1.4%, capping the best inauguration day reaction since Jan 20th became the official start in 1937. Rising shares of Netflix and other technology companies pushed major stock indexes to fresh records on Wednesday, reviving Wall Street's appetite for growth stocks. Shares of the streaming giant jumped 17%, Netflix's single biggest day in more than 4 years. The rally came after the company reported better than expected results for the most recent quarter, showing that it had more than 200 million subscribers at the end of last year. The company, more importantly, also said that it had enough cash to fund further growth without having to assume more debt and is considering buyback of some sort. Investors took the results as a sign that streaming companies and other tech businesses remain clear winners as the COVID-19 pandemic continues to spread across the US. With millions of Americans spending large chunks of time at home, many have passed the time by streaming movies and television shows. The results sparked a broad stock market rally, lifting shares of other streaming companies including Disney as well as Apple, Google, Facebook and other tech stocks as well. The S&P 500 finished up 1.4%, new closing high. The Nasdaq was up 2%, also notching a record close. The Dow Jones finished at a fresh high as well, rising 0.8%. Earnings results so far have been better than expected, with 88% of the companies beating estimates through Wednesday morning. This is according to FactSet. That, along with the expectations of further profit growth this year and a rebound in economic activity, should act as a foundation for further stock market gains, is what some analysts has written. Netflix rise led the S&P 500's communication sector up 3.6%. Tech stocks in the index rose 2%, while consumer discretionary stocks added about 2.3%. On the Treasuries front, the Treasuries advanced, bringing the 10-year yield just below 1.08. The loonie paced the G10 gains, rising to a 2-year high after Bank of Canada left rates unchanged and predicted a strong second half rebound. Oil and gold both rose. Asian equity futures are modestly in the green. In other markets, the Euro Stoxx 600 rose about 0.7%. In Asia, stock indexes were mixed. The Nikkei 225 ended the day down 0.4%, while the Shanghai Composite rose about 0.5%. More importantly, Chinese internet giant Alibaba jumped about 8.5% in Hong Kong after the company's owner Jack Ma made his first public appearance in 3 months, ending concerns about his whereabouts. Hong Kong's Hang Seng Index also gained about 1.1% to hit a 20-month high as stocks buoyed in recent days by hefty inflows from mainland China. Morgan Stanley reported yesterday. Morgan Stanley beat across the board from FICC and equities trading to investment banking and wealth management. CEO James Gorman spent a lot of time discussing the company's recent acquisitions of E-Trade and Eaton Vance and told analysts the next decade will be characterized by growth with drivers spanning across all 3 of the firm's business lines. In other reports, United Health affirmed its outlook, but the stock slipped as costs of COVID care increased. BNY Mellon's net interest margin missed estimates, shares dropped. P&G boosted its sales and profit outlook after earnings beat and shares rose. Some update on the Ant Group. Ant Group could face antitrust action under central bank's new draft rules, a sign Jack Ma's reappearance on Wednesday doesn't signal an all clear for his empire. The PBOC said any non-bank payment company with half the market or 2 entities with a combined 2/3 share would be subject to probes and possible restrictive measures, including breakup. Licensed firms would have a year to comply. Tencent would also be potentially affected, so something that we have to look out for in the next coming days. For all the Bitcoin fans, BlackRock is adding Bitcoin futures as an eligible investment in 2 funds. the first time it's offered client exposure to cryptocurrency. It filed updated prospectus for BlackRock Strategic Income Opportunities and BlackRock Global Allocation Fund, which included cash-settled Bitcoin futures among assets they are permitted to buy. Lastly, we'll be looking out for central bank decisions from the Bank of Japan, Bank of Indonesia, and European Central Bank. All three central banks are expected to keep their monetary policy the same, but any views on how the recovery is going to be will be watched very closely, and the market might react to it. So that's the update. Stay safe and healthy, and I'll speak to you tomorrow.